You know that feeling, right? Every single day, we're just bombarded with an incredible amount of information, articles, reports, research. It's like a tidal wave. And the real challenge isn't just finding the data, it's, well, distilling it, understanding what truly matters, and, cutting through all that noise. Well, that's exactly what we're here to do for you today. Welcome to the Deep Dive. Today, we're plunging into the recent world of Finolex Industries Ltd, our sources for this deep dive. We've got the outcome of their recent board meeting, their unaudited Q1 FY26 financial results. That's for the quarter ending June 30, 2025, and their detailed investor presentation. So our mission today is really to unpack these sources for you. We want to pull out the most crucial insights. We'll be looking at everything from significant shifts in their leadership team to the company's financial health and even their actually quite impressive community engagement efforts. Get ready for some clear explanations that hopefully cut through the noise and reveal some maybe surprising strategic moves.
Okay, let's unpack this first piece. It seems Finolex Industries has been pretty busy with some major leadership changes. Right at the top. It feels like a strategic recalibration in the C-suite, maybe. So first up, they've appointed Mr. Udit Agarwal as their new managing director. His role is sort of phased. He starts as an additional director come whole-time director this September, then transitions fully into the managing director and key managerial personnel role. That's for a 5-year term starting November 1st, 2025. This, of course, is subject to approval at their upcoming annual general meeting. Now, Mr. Agarwal, he's 56, brings over 3 decades of experience across Asia, and a really proven track record, it seems, of transforming businesses, launching ventures, driving sustainable growth. For U.S. and European companies, no less, he's currently the Chief Commercial Officer at Alkyl Amines Chemicals Limited, overseeing a broad portfolio from business strategy right through to M&A. Before that, he was apparently instrumental in setting up Cargill Bioindustrial's India business and led their whole Asia region, plus roles at BASF. Academically, BTech in Chemical Technology and Executive Education from INSEAD. So quite the resume. It's not just the MD role that's changing. They also appointed Mr. Babu Sanka. He's coming in as additional director, a whole-time director, specifically as Director Technical, also a 5-year term starting August 2nd, 2025. Mr. Sanka, he's 63, strong academic background too, MTech from IIT Mumbai. He's actually been overseeing plant operations as President Technical since March and brings, get this, 39 years of experience in chemical manufacturing, 31 of those specifically in VCM, that's vinyl chloride monomer and PVC production. So real deep expertise in process optimization, large-scale plant expansions. He had prior roles at Reliance Industries and TCI Sanmar Chemicals too.
What's really fascinating here is how these appointments seem to signal a kind of dual strategic focus. We've got Mr. Agarwal with his background driving growth, market expansion, paired with Mr. Sanka's incredibly deep specialized experience in the core PVC manufacturing process itself. It really suggests Finolex might be gearing up for both, aggressive market penetration and a renewed push for operational efficiency, maybe cost optimization too, which is, particularly crucial given how volatile their raw material markets can be.
That's a really sharp observation. So it's not just about getting new faces in, it's about bringing in very specific skill sets at what seems like a critical time. So what does this mean for the folks who are leaving? Well, yeah, with new appointments come some pretty significant departures. The outgoing managing director, Mr. Saurabh Dhanorkar, is resigning effective October 25th, 2025. The reason given is he'll be turning 70, which aligns with age limits under company regulations. He chose not to seek reappointment. The board did express, great appreciation for his exemplary leadership and valuable contributions. Standard, but important. We also saw the resignation of Mr. Soumya Chakrabarti as Director Technical. That's effective August 31st, 2025. Cited personal reasons for that. And finally, Mr. Rajesh Balkrishnarathe resigned as an independent director on August 2nd, 2025, citing other professional commitments.
And if we connect this to the bigger picture, these transitions, they're driven by different individual factors. Sure, age, personal reasons, other commitments. But collectively, it really looks like a deliberate shift. It feels like Finolex is consciously opening a new chapter, bringing in fresh perspectives, yes, but also that highly specialized expertise right at crucial leadership levels. Expertise that seems to align perfectly with maybe an anticipated strategic direction, focusing on both growth and efficiency.
Yeah, these leadership shifts are clearly significant. But of course, the real test of any company always lies in its numbers, right? So how did Finolex's strategic shifts or maybe just market conditions play out in their latest financials? Let's turn our gaze now to the results for the quarter ended June 30, 2025, Q1 FY26. Okay, so the board approved both standalone and consolidated unaudited financial results. Looking at the top line, revenue stood at just over 1,043 crore for Q1 FY26. That's both standalone and consolidated. Now, the investor presentation is quick to point out this is about 9% lower compared to Q1 FY25, which was roughly easily 1,140 crore. And the primary reason they cite, weaker realization from, you guessed it, PVC price volatility. Okay, then when we look at profitability, the profit before tax, PBT, for standalone ops was around 126 crore in Q1 FY26. That's a significant 45% decrease compared to over 229 crore in Q1 FY25, a big drop. Consolidated PBT was roughly 131 crore. Profit after tax, PET standalone was about 97 crore in Q1 FY26. That's down quite sharply from over 555 crore in Q1 FY25. Consolidated PET was about 98 crore. And EBITDA,
that stood at around 94 crore in Q1 FY26 for standalone operations compared to about 207 crore in Q1 FY25. That's a pretty stark 63% drop. Finally, earnings per share EPS came in at 1.57 for standalone and 1.59 for consolidated.
Yeah, this performance definitely reflects a challenging quarter. You can really see the profound impact of the PVC price volatility on their revenue and especially their profitability. The sharp drops in EBITDA and PBT really highlight how sensitive Finolex's margins are to fluctuations in raw material prices. It's inherent in the business model. What this really tells us is that, despite potentially strong underlying operations, these external commodity cycles can significantly hit their bottom line hard.
Right, so even if they're managing to sell product, if the price of their core material, PVC, tanks, their profits just follow it down. That's a critical point to grasp. And speaking of those PVC prices, the investor presentation gives us the exact picture of that volatility they mentioned. Average PVC prices in Q1 FY26 were $708 per metric ton. That's a noticeable decrease compared to $855 per metric ton in Q1 FY25. And the PVC-EVC delta, that's a key indicator of profitability in PVC manufacturing. Basically, the spread between the product price and a key raw material cost that also dips slightly. From $533 per metric ton in Q1 FY25 down to $520 in Q1 FY26. So the margin squeeze is clear. Yet, and this is interesting, despite this revenue dip, there's a positive note on the operational front. For their core business, anyway, the pipes and fittings, or P&F segment, actually showed modest volume growth. 2% in Q1 FY26. They reached over 92,000 metric tons compared to just over 90,000 in Q1 FY25. And this growth was specifically noted in the report as being in spite of weak demand scenario. So that's quite telling. The company also maintains strong liquidity.
They reported free cash and net cash of approximately 2,433 crore in Q1 FY26. That's actually up from around 2,401 crore in Q1 FY25. So plenty of cash on hand. Oh, and it's also worth noting that Finolex Industries has apparently realigned its internal reporting. They now operate as a single integrated business focused solely on the manufacture and sale of pipes and fittings.
That's really interesting, that modest 2% volume growth in their core P&F segment, coupled with that robust liquidity, especially despite the significant price headwinds, that truly highlights an underlying strength, either in their operational capacity or their market presence, or likely both.
Yeah.
It shows they can still move product even when the overall market or pricing environment is tough. And the shift to a single integrated business focus, that clarifies their strategic intent. It suggests they're streamlining, maybe enabling better resource allocation, better performance assessment, perhaps precisely to counter these kinds of external pressures.
That's fascinating. So they seem to be tightening their focus internally, maybe becoming more efficient and still managing to grow volume slightly, even while dealing with a big hit to revenue and profit from those external commodity prices. It does tell you a lot about their fundamental business resilience, doesn't it? Okay, now let's maybe zoom out a bit from the balance sheet and look at how Finolex engages with its market and the wider community. This part always gives me those insights into a company's maybe longer-term strategy beyond just the quarterly numbers. Their marketing, for instance, seems quite impressive on paper. They are reported reaching over 5 crore people. That's 50 million through ATL, above-the-line activities. So broad marketing like TV, radio, sponsorships, social media. And they also reached over 0.70 crore, so 7 million people, through on-ground events and exhibitions across India. They've executed some really specific large-scale campaigns, like TV campaigns with weather branding in 30 regional news channels. Okay. Then their digital campaigns for the Pantapur Wari, which is a huge pilgrimage in Maharashtra, reached over 5 crore on social media alone.
Plus physical coverage across nearly 40 key Wadi locations, distributing literally millions of utility items, extensive branding. Reaching, they estimate, over 50 lakh devotees. That's 5 million people. Similarly, for the Puri Rath Yatra in Odisha, another massive cultural event. 5 distribution points, hundreds of thousands of caps distributed, reaching over 20 lakh devotees. And on the more traditional side, brand visibility stuff. Thousands of retailer certificates installed, extensive in-shop branding, dozens of retail boards put up in key regions like Karnataka and Hyderabad. Plus, they've picked up multiple awards for these marketing initiatives, things like their Mahakumbh campaign and a Diwali film.
Yeah, what's striking here isn't just the sheer scale, though that's impressive. It's the variety and the depth of their marketing efforts. It really demonstrates a quite sophisticated approach. It's not just about brand building through traditional ads. It's about deeply engaging with major cultural and community events. In a diverse market like India, that kind of engagement builds significant goodwill, local presence. It can potentially turn consumers into, genuine brand advocates, much stickier than just seeing an ad.
Right, so it's less about just selling products directly and more about embedding the brand deeply into the cultural fabric, a very clever kind of long-game strategy, which actually brings us quite neatly to their CSR efforts, their corporate social responsibility work. Because beyond marketing pipes, Finolex seems truly invested in, well, building communities. Their CSR efforts are really extensive. It's managed through their dedicated CSR arm, the Mukul Maha Foundation, and they are apparently active in 15 out of the 16 officially mandated areas for CSR in India. That's broad, just some examples. In agriculture and rural development, they distributed high-quality rice seeds to farmers in Ratnagiri, small scale, but direct impact. For differently abled individuals, they provide comprehensive rehab and education for children and young adults with deaf blindness. Also skilling visually impaired individuals in things like umbrella making. When it comes to promoting gender equality, they train women to make smokeless chulas, which has health benefits too. They offer mushroom cultivation training for tribal women, providing income generation, and they even construct period-positive holiday homes and toilets.
In preventive healthcare, they run mammography camps for early breast cancer detection, offer health checkups for truck drivers, a group often overlooked, and support kids with cerebral palsy. Clean water and sanitation. A big water conservation initiative in Solapur, benefiting hundreds of acres by increasing groundwater levels, plus installing RO water systems in places like ITIs, technical institutes, eradication of hunger and poverty, monthly grocery support to various institutes, providing hot meals for pavement dwellers and school students, and even environmental sustainability they're involved in, desilting a 2-kilometer stretch of the Karakwazla Dam near Pune. That boosts water storage, groundwater recharge, and farm productivity. Quite a project.
It really does raise an important question, doesn't it? Why does a company primarily focused on pipes and fittings invest so heavily and so broadly in social impact across so many different areas? If we connect this back to the bigger picture, the strategy, it suggests a perhaps strategic understanding of long-term sustainability and brand loyalty. It's likely not just pure altruism, though that might be part of it. It's probably also a recognition that their own business success is intricately intertwined with the well-being of the communities they operate in and sell to. And, in a competitive landscape, this deep societal embedment, this level of CSR activity, it can be a powerful differentiator. It builds a different kind of brand value.
It's certainly an interesting counterpoint to those challenging financial numbers we saw, isn't it? A company investing so much in community, even when its own profits are being squeezed by external factors. So wrapping this up, what does this all mean for you, the listener, interested in cutting through that information overload? To summarize our deep dive today, Finolex Industries is clearly undergoing a significant leadership transition. They're bringing in new, specialized expertise, seemingly aimed at steering its next phase of, likely, both growth and efficiency. Its Q1 FY26 financials show a definite revenue and profit dip. Yes, primarily influenced by that global PVC price volatility. But the company also demonstrates resilience. There's that modest volume growth in its core pipes and fittings segment, and it maintains strong liquidity. Cash is still strong. And importantly, beyond the financials, the company is actively engaged in really extensive marketing and social initiatives, deeply embedding itself within communities across India. So, as you consider all this information we've unpacked, maybe think about this. How will the interplay between this new leadership, the current market challenges, especially around PVC prices, and this deep community engagement define Finolex's trajectory in the coming years? And maybe a broader question for you. How do you, as an informed observer, weigh a company's short-term financial performance against its broader societal impact and its long-term brand-building efforts when you're evaluating its overall health and potential? Something to mull over.